Hi, good morning, everyone. We can get going here. All right. Yesterday, obviously, we saw rough session pretty much across the board for markets. We saw Germany really take a steep fall earlier in the day. I think a little bit on speculation that could have a potential sovereign downgrade on debt there. We also last night we saw the Fed beige book minutes, but nothing real out of line or surprising there. Also markets were obviously really heavy from the resource side, but we also saw some of that spread in some of the other sectors. Apple, one of them being down 5.5% yesterday. If it broke through that 420 support we've been talking about the last couple days, major break there. Could definitely be looking into maybe around 365, 370, something like that on that breakdown. The market's under a lot of pressure nonetheless, and I think people are really searching for answers into why commodity prices are really just unraveling so steeply. Asian stocks obviously off as well on the back of the U.S. session. Nothing too significant though, reasonably well held considering. But obviously, resource stocks continued to lead the decline there. Copper down another 2.8% overnight. And things just continue to be ugly there, and the people trying to pick bottoms are getting absolutely killed in those markets. A lot of corporate action out today. Huge day for earnings in the States. We did have American Express that was out last night, and eBay. They're both beat on the EPS number. We're more or less in line on the revenue number with American Express, but we were light on revenue out of eBay, and also light on guidance out of eBay, so they sold off a little bit. Today we've got Pepsi, we've got Philip Morris, Morgan Stanley, Verizon, Freeport McMoRan, Google, IBM, and Microsoft. So hell of a lot of tech companies out today. We've also obviously got some defensives, bank, resources. We've pretty much got a little bit of everything going on today in the States, so could continue to give us some indication. One thing I also like to just make a note of is the last week and a half or so out of the U.S., the transports have really been a laggard. So something we need to keep an eye on there. Obviously, Dow transport theory is more than a theory. I think it's a very good leading indicator, and something that we need to pay attention to. Okay, SAB came out with a quarter four sales and revenue release today, this morning. They pretty much blew it out the water on the organic lager volumes. I think reasonably good report across the board out of SAB, so we could look to see them trade up a little bit. Just keep your eye on that. I don't want to try to make a call that it's going to trade up, but let's just watch them closely. Know that there's some new news there out of breweries. Also, we've got a lot of data out today, or not too much data, but some important data out today. Being initial jobless claims in the States is the big one. We've also got retail sales out of the UK, and then we've got leading indicators in the US as well. The Chinese property price numbers that came in earlier, they're saying that home prices rose in 68 cities in the month of March, and that was versus 66 in Feb. So pretty good numbers on the housing front there, I think, out of China. Not that anyone necessarily believes it, but hasn't really made an impact to our resources. Okay, let's jump into the maps here. Okay, first thing I want to look at is the Aussie, and let's just show here. You can see this morning, or as of yesterday's close, we really closed right at the 200-day moving average. If I go back to a 2-year as well, you can see that we're kind of getting close to trendline support. We could take that one little blip out and then put the number right at 3,300, which is interesting because the target that we had drawn for this breakdown from top to bottom was for a 3,500 point sell-off, and wouldn't you know that 33,000 is right at that level. So I think we're getting obviously we're quite oversold on the local index. Obviously, a lot of that's being led by resources, but we're starting to really see some of that selling across the board. I think that 33,000 is going to be close to the area where we can look to start to nibble. But I think you got to be cautious on that. We've got some trendline support coming in there. We are breaking narrowly below the 200-day moving average as of yesterday's close. I think this morning we're kind of trading right around it. So just keep that in mind. Around 33,000. What is it? 33,434 is the 200-day moving average, which we're about 70 points above that at the moment. So let's watch that one very closely. Let's watch this trend line support, which obviously will move up a little bit as the graph moves out to the right a bit. But we could be getting very close to the levels that we need to start to have nibbles on the index here. All right, let's look at. Let's look at Standard Bank. I want to go all the way back to a 5-year chart on Standard Bank and show how we're coming right into trendline support where we closed yesterday. On Standard Bank, it's hard to see because it's so, the 5 years, that one little line is kind of a blip on the screen, but we're really, really close to trendline support on Standard Bank. Obviously, it's a major correction. The bottom of this breakout here is about 104, which I really think is kind of maybe the bottom end target for Standard Bank if it was to fill this entire pattern out and come back down to the bottom here. But I think we're really getting close to the levels here. If you don't remember, you can see here that 108 was, besides this little breakout, this little head fake here, was kind of where we broke out from in this pattern. So I think there is some support here at 108. Trendline support going all the way back 5 years. Something to keep in mind and watch out for, and hope that holds if you're long. All right, Impalas. The reason I wanted to show Impalas again, you can see here, it's easier to see if I show you on a 1 year. Where we closed yesterday, new closing low going all the way back, I think, 5 years or so. Yeah, not quite a closing low for 5 years, but getting very close. But a new closing low for the past 4 years. I really think that, around here, 110, if we get 110, if we get a close below 110, this thing could really get ugly. I think it's ugly already, and I think that this pattern that we saw this breakdown from, when we talked about it before, we talked about how steep that is, a $50 drop. And after seeing the action in the gold miners over the last couple of days, I really think that Impalas are destined for sub 100, at least 90, where there's some support, and possibly even all the way down to $75. This could get ugly around here for some of our local resource counters. All right. The next one I want to show is Harmony. The reason why I want to show Harmony, and I'm showing you the New York price here, is because last night you can see here when we got below $5 on the open last night. And what's important to realize there is once you go below $5 in the U.S., no matter what your market cap is, just the fact that the share is trading below $5, you're all of a sudden classified as a penny stock in the fund management world. And so it's a huge thing for a lot of these funds that can no longer hold stocks that are under $5. And what you'll see is you can see a lot of forced selling that can come into some of these shares. I'm not saying that's necessarily what happened in Harmony, but it did manage to lose another 7.6% last night, which is a lot heavier than some of the others. Your Goldfields and a couple of the others held up a lot better. But I think part of the reason could be that we did drop into penny stock territory. Another one that I'll just show you quickly is also Siboney, and we'll just shorten that up a little bit here to 30-day here, and you can see we gap down. Once we gap down below this level around 520, we gap down the next day. We opened up below $5, and it's just cratered straight away since it's gotten below 5. We closed last night at 4, so it's fallen 20% in 4 days on Siboney. And yeah, I think a lot of this has to do. Obviously, there's a washout in golds. Golds are offered anyway, but we're looking at a significant acceleration and sell-off, I think, because we're dropping below $5 and considered a penny stock in the U.S. at the moment. All right, next one I'll have a look at here is Investec, IMP. Sorry, let me just talk one more thing about some of the golds in the States. I mean, let's just have a quick look again. And just see how, if we look at yesterday's action, when these things really finished quite poorly, you can see how the acceleration in the last hour of the day. I mean, we sold off several percent in the last hour of the day in all stocks there in the U.S. So I think it's really important to just see how the acceleration really picked up here in the last hour of the day. So just realize that this whole sell-off in the golds may not quite be over. All right, I wanted to show Investec, INPs here. I'll shorten it up a touch, but you can see there at $60, which is really where we got that nice little bounce off before. We talked about this as kind of a fib level for this breakout, if I'm not mistaken, for this move up. Around 61.8% retracement where we actually made this break up from, right around $60. You can see there's major support. It's something going to be really critical to watch out for today. If 60 doesn't hold, we'll be looking at maybe call it $3 to the downside, which would put us down to 57, which would actually be right at the 200-day moving average. Could be a really, really interesting place to get long some Investec. So keep an eye on that one today. This level around 60 is going to be big. All right, we're going to show. I just want to show ARM in the States, a semiconductor. In the UK. And just so how we've broken down here out of this little pattern here below about 875, call it, and we're coming from quite a reasonable way north of this, so this thing looks like it could have 10% on the downside or maybe a pound a little bit more if we can stay below this level in the next day or two. And the last one I'm going to show is BAE Systems in London, which had a vicious drop yesterday, if I'm not mistaken, on some earnings. And you can see here we're really breaking below this range, which is quite significant. We're talking about potentially down to around £3.60, which is a good ways from here. So keep an eye on those if you guys are punting overseas today. And that's it for today, guys. Thanks a lot.